Buying a house might be the biggest financial decision of your life. There are plenty of things to do, but what should you not do before closing? That's what we're going to talk about in this video. Hey guys, welcome back. It's Eric Sztanyo from Keller Williams Realty and TeamStanyo.com, where we are helping you find your home and strengthen your family. We're here once again with Jeff Bostic from Guaranteed Rate, our local loan officer extraordinaire.
Hey, I like that.
All right. So we've done a few videos. We've talked about the pre-approval process. We've talked about interest rates and how those impact your purchasing power and buying a house. We've talked about how can a lender help you win. But in this video, we want to talk about what are the things you shouldn't do in the loan application process. I'm sure you have a few good stories here.
Yeah, we've come across a few things. We'll give you some feedback.
All right. Have at it.
The biggest thing we've seen lately is job changes. And I think the market right now, I've seen a lot of figures that there are a lot of people just not happy with their jobs.
Right.
And so they're looking for the grass is greener. And that's great. I'm never discouraging of somebody. When you're looking for that next job, one, communicate with your lender. Make sure they know. The last thing we want is to get everything teed up for your pre-approval for your house buying based on your now job, only to find out you take a new job that might impact the ability to qualify. Now, if you're moving in the same industry, you're moving from salary job to salary job, probably not an issue.
Okay.
And like I said, it's all about communication. If you tell us, hey, I'm going to change, we're going to tell you what we need. Okay.
We don't like surprise. Surprise! I just changed my job, like at the closing table.
If you go from a salary job to a commission job, or decide that you want to quit your job and go open a bakery or some sort of self-employed job, that would be detrimental to your ability to buy a house.
Yep.
So I would strongly encourage close on the house, then go chase your dream.
Got it.
In that order.
And just ask, right? Ask how that's going to impact you either way if you're thinking about a big changing decision like
Absolutely.
that. Now, what about if a lot of people who watch this channel are from out of state and they're thinking of moving here? What if you're relocating?
For sure.
How does that impact the loan? Is there anything you shouldn't do?
So people relocate for one of a few reasons, but they're either coming here for a job that's local, or they're coming to be close to family or spouse is doing that, but they might be able to maintain their current job. So if you're maintaining your current job, we just need to verify that you're able to work remote. That's usually pretty simple to get from your employer, but we do have to get that. I can't have your word for it, the employer, especially if you were working like in an office and that's where the employer address was, and now you're moving. We do need to verify.
And is that just a letter, or is that
it's
pretty simple?
Yeah, okay. A letter from either a manager, HR, payroll, someone like that. And it can even be an email. Like we don't have to have letters anymore.
Okay.
So we're great with that. Otherwise, if you are accepting a new job, so the great news is you do not have to have started a new job. I don't need pay stubs for a new job. All I need is an offer letter. And you do need to start that position within 90 days of a closing date.
Okay. So, do they check in on you? How does that happen?
They don't check in afterwards always. There are a certain amount of audited files. So it could happen where like, hey, can you send us a pay stub? And I've actually had that happen where somebody did not start at the job that they had closed with. So we just...
What did they do?
They had taken a new job. So we just got that. And
Did you take the loan away?
We actually don't take the loan away. No. So once we sign... Someone's on the hook for the loan, right?
Yeah.
So it's not an order of that, but there is a saleability to that loan. So banks, when banks lend money, they don't lend their own money. They actually do at first, but then they get paid back by Fannie Mae or Freddie Mac. And so if Fannie Mae or Freddie Mac says, did that guy start his job? Then we're like, hey, we need a pay stub.
Yeah.
We get a pay stub. Or if it's not there, they're like, that's not a saleable loan. We're not going to take it. So
remember, people are lending their money to you, so they want to find this stuff. So let's go on. Not that any of you guys are boneheads, but what are some other bonehead things that you've seen or that you shouldn't do during the loan application and approving process, right?
Yes. So new credit is always the biggest thing that I see, and more often than job is. They need to open a new account. They need to buy a new car. They're in line at the retailer and it's Christmas time and they say, hey, do you want to save 10 or 20% off your purchase? And inevitably people forget, oh, I'm buying a house, or is this going to impact me? And as we were talking, these are not detrimental things most of the time. They could be, but most of the time, these are not detrimental things that are going to impact your purchase. They're just going to add headaches to you.
Yeah.
And it's extra documentation because we have to qualify all of your debt that you have and to use that to qualify for your house. And so if you bought a new car, if you open that new charge account. If you did something to add new debt, we need to verify.
Well, you said you see a lot of these at Christmas time. Like
always.
You're in line at Target, you're in line at Old Navy, Kohl's, whatever. And I can save 10% on my purchase today? Heck yeah.
Sometimes it's 20 or 30 and
it's pretty appealing.
It can be appealing.
But you forget that you're buying a house and now you just ruined it. So I hope the 10% was worth it.
Yeah, I hope you can sleep in whatever it is that you bought. No, it's just a matter of documenting what it is. But if our goal is to help you avoid headaches, we want this to be a smooth process, right? We want it to be enjoyable for you. I don't like having to call and ask you to find the receipt statement that they gave you at the checkout at Kohl's saying, hey, you've got a $500 credit limit. Like, I don't want to ask you for that. And you probably have it in the bottom of your purse or, in the garbage can at this point.
So it probably won't ruin everything, but it's a headache. It's a pain.
Big headache. And if you can avoid that during that time frame. So most of the time we don't run a new credit check, but every lender that I know these days is doing something called debt monitoring. They see if a new inquiry has been made. If a new inquiry is made from the time you apply to the time you buy, they are asking, did you open new credit there?
I remember as a teenager and young 20-something, see if you guys remember this, going to Reds games at not Great American, at then
Riverfront.
At then Synergy Field, I think probably when they cut out the wedge like to build Great American, and they, the credit card people would be there every time. And you could get like a floppy Reds hat. I probably had like 7 of those floppy Reds hats. Because I was just like, hey, this is free.
Like a t-shirt.
This is amazing. Yeah. I get all these stupid gifts and having no idea like that I have like 15 credit cards open. I never used any of them.
No.
But I was like, free Reds floppy hat.
Free gear.
Comment below if you guys have a floppy Reds hat from the early 2000s in your closet somewhere.
All kinds of good stuff.
Okay, what else? What else should we avoid here? What not to do?
So we laugh about the new debt. The one thing I would say, there are major purchases that you need to make. If your car breaks down and you have to get a new one, or a lease is expiring and you need to do something there. We're not trying to limit your ability to live life, right? But just check in with us, because if you take on more of a payment than what you can afford with buying that house, you might end up living in that truck you bought. So make sure that you are communicating that we're kind of setting you up. If you've got a payment right now of $500 and you on an auto loan and you go and buy another one with the same payment, we already qualified you with it. And so if something does happen, it happens where someone has gone through an accident, they have to get a new car, right? Like those things have occurred in the middle of a purchase, right?
Yeah.
So sometimes these things do happen, life happens, but communicate with us. We've also had people take out too much of a loan and now they don't qualify. So now we might need a co-sign, or we have to restructure. They have to put more money down. And so we don't want to impact your ability to purchase because you didn't communicate. So that's just a huge one.
And it's not like you can't buy the car in 20 more days or whatever, just realize that like you're kind of under scrutiny during this period, this process, this short amount of time, this underwriting process, and they're being alerted of anything you're doing. Yep. So just be careful, be aware of that, and don't do anything crazy. Sure. Yeah. Or ask first, like, can I do this?
Yep.
Okay.
Another one that we do see sometimes is make sure you're staying on top of all your payments. We don't often need a new credit report, but if you've been shopping for a little while and maybe your credit report's 3 or 4 months old, we're going to need a new one before we get to closing, because they do have an expiration date on them.
Okay.
And what we don't want to have happen is your credit was perfect or flawless or good enough at the time of pre-approval, to then you didn't see the Macy's card that you forgot to make a payment on, and now it tanked your score 100 points. It's going to impact your interest rate. It's going to impact your ability to borrow. So make sure you don't miss any payments you don't want to miss payments anyway, but especially during the home buying process. Stay on top of your payments, keep your credit top notch, and don't have any, gaffes about,
because ultimately it's going to be more time, more hassle, and potentially more money on you if your credit score is dipping, and that results in the terms of the loan.
Very much so.
Okay. All right. So we hit changing jobs, taking out new credit cards, purchasing a new car or something on credit, missing payments. Is there anything else we should talk about of what not to do in this conversation?
Yeah, one thing, and we didn't talk about this before, but moving money, that's a big one. So down payment has to be verified between 30 and 60 days before a closing on a purchase. So where that down payment money is coming from, don't start moving large amounts of money that we can't source. Don't accept gifts from family that is not going to be able to be sourced. Make sure that the money that is verified for down payment, we know about. We do a great job on our team about vetting this out up front.
Yeah.
But for tips for people that are,
what if you're accepting a gift from a parent or a loved one for down payment? How should they handle that?
So talk to your lender first. What we encourage on most transaction types is don't take that money and put it in your account, just because then we have to paper trail exactly where it came from. Most of the time, what we encourage is the parent or donor, whoever that is, grandparent, aunt, uncle, they're going to fill out a letter just saying that money is a gift and it's not required to be repaid. And then we ask them to send that money direct to the title company that's handling the closing. That just cuts out so much paperwork. It makes everything simple. But if you are liquidating money, if you're selling some Bitcoin to put for your down payment, and you start to have these large transfers, and we have to verify where it all comes from. And so if it's not documentable, don't sell a car that doesn't have a transfer of title kind of thing. These are things that I've seen have occurred that have been difficult to document. So make sure you have your money set up. It's all there. Don't just start transferring or depositing cash. We can't verify the mattress money that you have there, like sitting in a safe or in your mattress. So,
the stories you could tell, I'm sure.
Oh yeah, so fun. But don't start moving a lot of money, and that's probably one of the biggest pitfalls.
So guys, when you're buying a house, it helps to have a team, some people with some experience. There's all kinds of things that you have to do. Hopefully this video was helpful for you in what not to do when you're buying a house. We're trying to make this process as seamless, as smooth, as enjoyable as it can be for you, because buying a home is fun, but it's also can be really stressful. And it can be a headache. So we try to make that process smoother, enjoyable, so that you're in the right home and you're super happy with the process. Jeff, thanks for joining us. We kind of did a little mini series here. We covered some ground, and they probably were posted over a few months, but that's okay. Jeff, if people wanted to reach out to you, ask more questions, what's the best way to contact you?
Yeah, I'd love to hear from you. Call or text at 513-633-0504, or hit up my website, and all our contact information is on there. That is rate.com/Jeff Bostic.
Awesome. Well, thank you so much for joining us, lending your expertise. It was awesome. As you guys know, if you want to work with Team Sztanyo, you can email me directly at eric.sztanyo@kw.com. Thanks for watching, guys. Thanks for being a part of the Sztanyo Clanyo. I think we can officially nominate Jeff as part of the Sztanyo Clanyo now.
I like that.
So thanks, guys, so much for watching. Plenty more great content to come on real estate here in Cincinnati, Northern Kentucky area. And we'll see you in the next one.